November 15th, 2024. That's the date being whispered in currency trading floors from Singapore to London. The date China allegedly executed a $3 trillion exodus from U.S. Treasury bonds, $3 trillion evaporating in coordinated silence. And before we go any further, before you write this off as another clickbait conspiracy, I need you to understand something. That date, that number, that entire narrative is a lie. But the lie itself is more revealing than any truth the financial media is willing to tell you. Because while China didn't dump $3 trillion on November 15th, the fact that anyone believes they could tells you everything about how fragile this system has become. How close we are to the edge, how the world's most powerful currency is being held together by perception, by momentum, by the collective agreement to keep pretending everything is fine, and here's what keeps me up at night. The real story, the one hiding beneath the $3 trillion fiction, is somehow even more disturbing. So let's start with what actually happened, because you deserve the numbers, the cold, hard, undeniable data that most financial commentators are either too lazy or too terrified to walk you through. China's U.S. Treasury holdings in late 2024 sit at approximately $760 billion. Not $3 trillion, $760 billion. Now, before you breathe a sigh of relief, before you think I'm here to tell you everything's okay, let me put that number in context. In 2013, China held over $1.3 trillion in U.S. debt. They've shed more than $500 billion over the past decade. That's not a sell-off. That's a methodical, calculated, decade-long divestment strategy. And the pace is accelerating. In 2022 alone, China dumped $173 billion. In the first quarter of 2024, they sold a record $53.3 billion in treasuries and agency bonds, the largest quarterly reduction ever recorded. Every month, another few billion disappears from their holdings. December 2024, down $9.6 billion. September, down $2.6 billion. These aren't market fluctuations. This is policy. This is intentional. This is China slowly, methodically, pulling the plug on their participation in the dollar system. And they're not stupid enough to do it all at once, because here's the thing about holding $760 billion in someone else's debt. If you try to dump it overnight, you don't hurt them, you obliterate yourself. The market value collapses, yields spike. And every dollar you're still holding loses value in real time. It's financial suicide. So instead, they're doing something far more sophisticated. They're building the exit before they walk through the door. And this is where the story gets interesting, because while everyone's obsessing over whether China sold $3 trillion, they're missing the architecture being constructed in plain sight. Let me tell you what China has actually been doing. Because if the $3 trillion hoax is the ghost story that gets clicks, this is the horror movie that's actually playing out in the real world. For the past 15 years, while America was fighting wars in the Middle East and bailing out banks and printing money to fund stimulus packages, China was making friends, not the kind of friends you have over for dinner, the kind of friends you build empires with. The BRICS alliance, Brazil, Russia, India, China, South Africa. It started as an acronym, a cute way for investors to talk about emerging markets. Now it represents over 40% of the global population and a growing share of world GDP. And in 2023, they did something that should have been front-page news everywhere. They expanded. They invited Saudi Arabia, the United Arab Emirates, Egypt, Iran, and Ethiopia to join. Let me repeat that, Saudi Arabia. The country that has sold oil exclusively in US dollars since 1974, the foundational pillar of what we call the petrodollar system. They're now sitting at the table with an alliance explicitly designed to reduce dependence on the dollar. You want to know what a currency dying looks like? It doesn't look like a $3 trillion sell-off on a single day. It looks like the slow, quiet defection of allies. It looks like bilateral trade agreements bypassing the dollar entirely. Russia and China now conduct almost all their trade in rubles and yuan, $0 involved. China has signed currency swap agreements with dozens of countries, Brazil, Argentina, Pakistan, allowing them to trade directly in local currencies without touching the dollar. Over 40 nations have expressed interest in joining or cooperating with the BRICS payment systems. These aren't small players. These are major economies representing billions of people. And then there's gold. Oh, let's talk about gold. Because while the $3 trillion hoax focused everyone's attention on Treasury bonds, China has been accumulating the one asset that's been money for 5,000 years. Officially, China reports holding around 2,000 tons of gold, but analysts who track import flows, mining production, and central bank purchases estimate the real number. Could be anywhere from 20,000 to 30,000 tons. Nobody knows for sure, because China doesn't exactly publish audited balance sheets. But here's what we do know. In recent years, gold has climbed to approximately 4.9% of China's official reserves, the highest level since 2015. And every month they're buying more. Not just China, central banks around the world accumulated record amounts of gold in 2022 and 2023. Why? Because when you watch the United States freeze Russia's dollar reserves after the Ukraine invasion, when you see America weaponize the SWIFT payment system to cut off countries it doesn't like, you start asking yourself a very simple question: what happens if they do that to me? And the answer is you diversify, you buy gold, you build alternative payment rails, you prepare for a world where the dollar isn't the only option. So let me paint you a picture of what's actually happening here, because it's not a conspiracy, it's not a secret plan. It's a rational response to observable incentives. The United States has spent the past 2 decades proving that the dollar is not a neutral store of value. It's a geopolitical weapon. We print trillions to fund government spending and bailouts. We sanction countries and freeze their assets. We've run up $35 trillion in national debt with no plan to pay it back. And every time we do this, every time we weaponize the currency or print another trillion, we give the rest of the world one more reason to look for an alternative. And China is offering them one, not a $3 trillion shock, not a dramatic overnight collapse, but a steady, methodical construction of parallel infrastructure, a new development bank to compete with the World Bank, a contingent reserve arrangement to provide liquidity without the IMF, payment systems like CIPS to bypass SWIFT, trade agreements that make the yuan a viable settlement currency, massive gold reserves to back it all up. This is a plan 15 years in the making, and the terrifying part, it's working. The dollar's share of global foreign exchange reserves has fallen from 71% in 1999 to under 59% today. That's a massive decline. And it's accelerating. The yuan now accounts for over 2.5% of global reserves, up from essentially zero a decade ago. Global trade settled in yuan has increased by over 1,000% in the past 5 years. The Shanghai Gold Exchange now handles more physical gold volume. These are not hypotheticals, these are not predictions, these are facts. This is happening right now. So why the $3 trillion hoax? Why is that story circulating if it's so obviously false? Because it serves a purpose. It shifts the conversation from the slow, boring, inevitable decline of the dollar to a single dramatic event that either did or didn't happen. It lets people dismiss the whole thing as conspiracy theory, as fear-mongering, as clickbait. And while everyone's arguing about whether China dumped $3 trillion, they're not asking the much more important question: what happens when the dollar loses its reserve currency status? Not if, when. Because the trajectory is clear, the incentives are clear, the infrastructure being built by China and the BRICS nations is clear. So let me answer that question for you, because this is where it gets personal. This is where it stops being an abstract conversation about geopolitics and becomes about your life, your savings, your future. When the dollar loses reserve status, the first thing that happens is interest rates spike. Right now, the US government can borrow money at relatively low rates because there's always demand for Treasury bonds. Foreign central banks need dollars for trade, so they buy our debt. But when that demand disappears, when China and others are selling instead of buying, the government has to offer much higher interest rates to attract buyers. What does that mean for you? Your mortgage rate, which might be 7% today, could hit 15%. Your car loan doubles. Credit cards go to 35–40%. Borrowing money becomes prohibitively expensive. The housing market collapses because nobody can afford the payments. Businesses can't get loans. The entire economy, which runs on debt, seizes up. Second, inflation accelerates, not the transitory inflation we've seen recently. I'm talking about structural, persistent, your money is losing value every day inflation. Because when other countries don't need dollars for trade anymore, all those trillions of dollars currently held in foreign reserves come flooding back to the United States. More dollars chasing the same amount of goods and services, prices explode. Your grocery bill doubles, your rent doubles, your gas bill doubles, and your paycheck stays the same. This is what currency collapse looks like, not hyperinflation in 2 years, not some dramatic Weimar Germany collapse, but a steady, grinding devaluation that erodes your purchasing power year after year until you look around and realize you can't afford the life you used to have. Third, and this is the part nobody wants to talk about, America's standard of living declines. We've been living beyond our means for decades. We import more than we export. We consume more than we produce. And we've been able to do this because the world accepts our dollars in exchange for their goods. But when the dollar loses reserve status, that party ends. Suddenly, we have to produce things of value to trade for the things we want. Our trade deficit becomes unsustainable. Imports become expensive, and Americans have to accept a lower standard of living. No more cheap electronics, no more affordable clothing, no more inexpensive produce. Everything costs more, and we earn less in global purchasing power terms. Now here's where I need to break the fourth wall for a second, because I know what you're thinking. If all this is true, if the dollar is really in decline, why isn't it bigger news? Why aren't the experts on TV talking about this every day? And that's the most important question of all. Because the answer reveals how the system actually works. The people who understand international finance, the central bankers, the treasury officials, the strategists at major banks, they know exactly what's happening. But they have every incentive to keep it quiet. If the general public panics about the dollar, if everyone rushes to convert their savings into gold or foreign currency or real assets, it accelerates the collapse. It becomes a self-fulfilling prophecy. So instead, they downplay it. They reassure everyone. They say the dollar is strong, that it will always be the reserve currency, that there's nothing to worry about. They attack anyone who raises alarms as a conspiracy theorist or a fearmonger. I've seen this movie before. In 2007, people who warned about the housing bubble were dismissed as crazy. The experts said housing prices never go down, subprime mortgages are fine, the economy is strong. And then 2008 happened. The same playbook is running right now with the dollar. The official narrative is everything's fine, but the data says otherwise. The actions of China and other central banks say otherwise, and history says otherwise. Because here's the thing about reserve currencies, they don't last forever. The British pound was the global reserve currency for over a century. It financed the Industrial Revolution. It underwrote global trade. It was backed by the most powerful empire the world had ever seen. And then, over the course of a few decades in the early 20th century, it wasn't. The transition happened faster than anyone expected. Within a generation, the pound went from dominant to irrelevant in global finance. The same thing happened to the Dutch guilder before that. And the Spanish real before that. Reserve currency status is not permanent. It's a privilege that has to be maintained. And the United States is not maintaining it. We're abusing it. We're taking it for granted. We're assuming the world will always want our dollars. And that assumption is about to be tested. So let's get to the part you actually care about. What do you do? How do you protect yourself? Because I can spend an hour explaining the geopolitics and the history and the mechanics of currency collapse, but if I don't give you actionable steps, this is just intellectual entertainment. So here's the reality. You need to reduce your dollar exposure. That doesn't mean panic. It doesn't mean sell everything and buy gold bars and move to the woods. It means diversification. It means recognizing that having 100% of your wealth denominated in a single currency that's in structural decline is a terrible risk-adjusted bet. Step 1. Own hard assets. Gold and silver are the obvious choices. They've been money for thousands of years. They can't be printed. They can't be inflated away by government decree. When currency crises hit, precious metals hold their value. But don't just buy paper gold, ETFs that say you own gold. Buy physical metal, coins, bars, something you can hold. Because if the financial system experiences stress, a piece of paper saying you own gold is worthless. You need the actual metal. How much? That depends on your situation, your risk tolerance, your time horizon. But in an environment where the reserve currency is in decline, a 20 to 30% allocation to precious metals is not unreasonable. Step 2. Real estate and productive assets. Land has intrinsic value. You can live on it, farm it, build on it. Companies that produce essential goods, energy, food, materials, those businesses will continue to have value regardless of what happens to the dollar. The key is to avoid over-leveraging. If you buy real estate with a variable rate mortgage and interest rates spike, you're in trouble. Pay cash or lock in long-term fixed rates. Step 3. International diversification. Open accounts with brokers or banks outside the United States. Buy property overseas. Invest in foreign stocks and bonds. This isn't about being unpatriotic. This is about not having all your eggs in one basket. If you were on a sinking ship, you wouldn't refuse to get in the lifeboat because you love the ship. You'd save yourself and your family. Same principle. Step 4. Reduce debt, especially variable rate debt. The last thing you want is to be stuck with debt that becomes unpayable when interest rates spike. Pay down credit cards, refinance to fixed rates while you still can. Step 5. Build skills and community. If the system breaks down, if the dollar loses significant value and supply chains are disrupted, the most valuable things will be skills and relationships. Learn to grow food, fix things. Build a network of people you trust. I'm not talking about doomsday prepping. I'm talking about basic resilience. Now let me address the elephant in the room one more time, the $3 trillion hoax. Why did I spend this entire time debunking it if the real story is just as concerning? Because precision matters. Because if you're going to protect yourself and your family, you need to understand what's actually happening. Not some sensationalized fiction. The truth is bad enough. China is methodically reducing its Treasury holdings. They've shed over $500 billion in the past decade. They're building alternative financial infrastructure. They're accumulating gold. They're making alliances. They're preparing for a world where the dollar is no longer dominant. That's real. That's documented. That's observable, and it's enough. You don't need a $3 trillion hoax to justify taking action. You just need to look at the data. So here's my final question for you. If the British pound could lose reserve status, if the Dutch guilder could fade into history, if empires and currencies that seemed invincible could decline and fall, why do you think the US dollar is immune? What makes you so sure that the system you grew up with, the currency you've trusted your entire life, is permanent? Because I'll tell you what the data shows. I'll tell you what China's actions show. I'll tell you what history shows. Nothing lasts forever, and the cracks are already forming. The question isn't whether the dollar will lose its reserve status. The question is whether you'll be ready when it does.